Welcome to Policy on Demand. I'm Sindhu Blume.
And I'm Scott McCandless. It is the week of April 7th, and this is your Monday briefing. Over the weekend, the Senate passed a compromise budget resolution, a big step to cut federal spending and perhaps permanently extend the 2017 TCJA tax cuts. The House might bring up and vote on the amended budget resolution in the Rules Committee this week. If both the Senate and House approve the measure, committees in both chambers could begin consideration of budget reconciliation legislation when Congress returns from a 2-week spring break recess that starts next week.
Some Republicans have expressed concern about the measure, and to pass it, they can only afford to lose 3 votes in both the House and the Senate. Meanwhile, the world is still processing the impact of President Trump's sweeping tariff announcements last week. U.S. Trade Representative Jameson Greer will testify in front of the Senate Finance Committee and the House Ways and Means Committee on April 8th and 9th, respectively, on the administration's trade policy agenda. And here to talk about how this and other developments are impacting the economy is PwC's National Economics and Statistics leader, Karl Russo. Karl, welcome.
Thanks for having me.
So before we get into the details about tariffs and the implications of the announcement from last week, I want to talk about the budget resolution and find out what the fiscal differences are between the House and the Senate.
Okay, so the House and the Senate will typically pass slightly different budget resolutions because the jurisdictions of the committees and the chambers are a little bit different. But the differences that we have in this version are much larger than historically has been the case. So if you think about the 3 big areas, spending, taxes, and the debt limit, there are big differences in each case. So on the spending side, the Senate resolution allows for up to, say, $5 billion of spending reductions from the various committees, whereas the House resolution is at least $1.5 trillion. And so very wide differences there, with as much as $2 trillion as a target in the House. Now, cut of $2 trillion would satisfy both resolutions, but there's still a wide gulf there. If you think about on the tax side, the main difference is sort of the current policy versus current law baselines that were originally in the House resolution. With current policy, the Senate starts off with $3.8 trillion or so that they don't have to pay for an offset, and then they do $1.5 trillion above that level. Whereas in the House resolution, you had only $4.5 trillion of tax cuts instructions, and that would actually be reduced to $4 trillion if the spending target wasn't hit. And then on the debt limit, the Senate provision allows for a $5 trillion increase in the debt limit, and the House is only at $4 trillion.
Karl, if we could turn to the tariffs for a moment. Certainly the stock market has had quite a reaction to it. I'd say volatile, but it hasn't been volatile. It's just been in one direction,
That's right.
Unfortunately down. Could you talk a little bit about some of the short and long-term economic impacts from the tariff announcement?
In the short run, I think the biggest thing that we're seeing is the uncertainty, right? So why do you see the big discounts in the stock prices is because we just are much less certain about where the future is going. And so that's going to pull down those expectations of the future profitability and is taking some of the steam out. And I think you'd expect to see that also affect potentially in the short run things like consumption, investment, as people try to shift their patterns in response to those policies without knowing how durable are those policies going to be and to what sort of significant reordering of economic policy and business policy is warranted as a result of those. But if you think about some of the estimates, if those policies remain in place for a long time, you're going to see large increases in revenue as a result, maybe on the order of $3 trillion or more over 10 years. And anytime you'd have a tax increase of that magnitude, you would expect to see negative economic results. And the current forecast by some is about 0.8 percentage points on GDP of a decline, again, depending on how long these policies remain in effect.
And after all of the intense activity on the market last week, there has been talk of, possibility of a recession. I want to get your thoughts on what the recession risk is, as well as your thoughts on inflation growth and consumer spending.
Yeah, well, one thing I think it's important to remind folks of is that we need a lot of humility as economists and others in looking at the world in this case. We have not seen tariffs at these levels since somewhere in the mid-1930s. We had a very different economy back then, right? We had fixed exchange rates. The US dollar was tied to gold. We don't really know how those international trade flows are going to respond in the current environment compared to what they did then. But what I think you're seeing is really inflation expectations are going to be increased slightly from where we are, maybe as much as a point in consumer prices, maybe a little bit more depending on, again, the durability of the policies. But that's probably a level shift of one time. We talked a little bit about the growth effects, maybe a 0.8% on GDP. Well, when you're talking about GDP forecasts that are only around 2%, that puts you much closer to a negative effect possibly on recession. So if you look at what the market indicators are saying right now about the probability of a recession, it's about 30%. That's up about 5% since before the tariff announcements. And I think if you look at private forecasters, many of them are even higher than that, going up. Still, everybody's below 50%, so nobody's saying it's more likely that we go into a recession in the next 12 months than not. But that uncertainty has increased those expectations.
With this risk of uncertainty, you want to talk about the Federal Reserve briefly. They seem to be in the mood to stand pat on interest rates. Do you think that might change in light of these new activities?
You know, I think it's interesting. If you go back to, say, a month ago, what the markets were expecting on Fed policy to be, the expectation was about 70% that we'd see no more than 3 interest rate reductions before the end of the year. Right now, it's more than a 70% chance that we see at least 4 reductions in interest rates. And I think that's due to these larger expectations that the economy is going to be in rougher straits, and the Fed might need to accommodate some of that by lowering interest rates maybe more quickly than they thought to stem off those chances, increased chances of recession.
All right. And finally, last week's reassuring jobs report. Could you talk about that? What is the significance and what can we expect?
Yeah, so we saw increases last week in about 228,000 new jobs relative to expectations that were somewhere in the 150 range. And that's more than the 158,000 new jobs on average that we've had over the last 12 months. So the labor market continues to show relatively robust signs compared to other economic indicators. But there's a lot of risk on the horizon as a result of that. You know, everything from how the federal and government potential restructuring and activities of the Department of Government Efficiency might play out, and further reductions in the federal workforce, which could weigh on those employment sectors. And of course, we would not expect to see any large effects from any of the trade and tariff policy, either in the overall levels of employment or reorganization among different industries. Right. As a result of those policies. They're going to have to be in place longer before we see those.
All right. Karl, thank you.
All right. Thank you very much.
Last week, we spoke with Mark Trushan on initial reactions to President Trump's announcement of new tariffs on April 2nd. A link to that interview is in the description of this episode, along with the latest Week in Review with Mark Prater.
Also in the description is a PwC insight on the tariff announcement. We appreciate you spending this time with us and hope you have a great week. Take care.